Happy morning to one and all present here. Welcome to today's one-day seminar on other commercial laws, CSR and risk-based internal audit. We have with us the CA Karthick Srinivasan sir to take us through the risk-based internal audit. May I now request Karthick sir to comment on further as please. We will start today's proceedings with the invocation of ICAI Motor Song. Let us all rise for ICAI Motor.
Yeshasupeshu jagrati Yeshasupeshu jagrati Kavam 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 sho nirvimanaha nirvimanaha Aded shukram brahma Tasmin lokaha sarve taduna tyadi kashjana etat dvaita etat dvaita etat dvaita etat dvaita etat dvaita etat dvaita.
Thank you. Let me introduce Karthick Srinivasan sir. Karthick Srinivasan is a partner of BKK Assurance Services. He is a BCom graduate and a chartered accountant. Karthick Srinivasan has more than 17 years of experience in the field of statutory audit, tax audit and risk advisory, including 11 years with the Big Four firms PwC, KPMG and Deloitte. He has rich experience in statutory audit, group audit, IFRS and tax audit. He had worked with Shell Business Operations and Statutory Reporting Team for 2 years and has helped them in designing their financial statement template on IFRS 101 IFRS and NL GAAP. He has worked extensively with the manufacturing, IT-enabled services, chemicals, automobile, NBFC clients belonging to large domestic and multinational business groups, including listed entities, both domestic and overseas. He has managed audit of Indian and global corporates like Cholamandalam Finance, Sundaram Finance, Caterpillar, Hyundai, Microsoft, Saint-Gobain, Sanmar, to name a few. He has been a part of audits of NBFC and insurance companies as well. His currently client profile include large entities such as TV Sundaram Iyengar and Sons Group and Mahindra World City Developers, Sundaram Finance, Caterpillar, Financial Services, Max Life Insurance, etc. So with this brief, I have great pleasure in presenting before you Karthick Srinivasan sir, who will take us through risk-based internal audit. May I now request Selvagani sir to come forward and present a shawl and memento on behalf of SARC of ICAI as a token of our love and affection.
Morning, friends.
Karthick.
Morning, friends. So on a day which is a day before New Year, CPE and other requirements, I think, because I have never seen something happening on a Sunday morning, that too especially before New Year. So I'd like to keep the things very sort of not very theoretical, but more of I would like interaction with the audience so that this is very interesting. Otherwise, this topic is a slightly dry topic. So it will again not be very interesting. So I would like participation from people. So when we speak about risk-based internal audit, what comes to your mind? Why do we need this? We all know there is internal audit of process, controls, all that happens, and all SOX, all that came, COSO, otherwise everything. So why do we need risk-based internal audit?
Mitigate the risk.
Yeah?
To mitigate the risk.
Yeah, mitigate more detail.
Protect the stakeholders, protect the interest of the stakeholders.
Okay.
Protect the organization itself.
Yeah, sir?
To protect the organization itself.
Risk-based internal audit we do generally to see how much areas we have to cover and what is the extent we have to cover.
That's right, but why did it come actually?
To be more focused, decide how much we want to get into that. Because when you are doing internal audit for a year,
Yeah, there are a lot of good answers. Anything which really kicked this, like enable this, because RBI has got a very detailed framework recently on this, and they made this as mandatory for NBFCs, banks, other entities. So why should that happen? There a regulator coming in and taking this and making it mandatory. Okay?
new risks are
Misstatements.
to prevent frauds and errors.
Yeah.
Diversion of funds basically. And,
Inherent
PMLA.
risk.
So many good answers. So the content we are going to see is, as we Someone rightly said, increasing frauds, changing expectation, and need for the risk-based internal audits. What is the RBI circular trying to say? Scope and objective of it, the key attributes in it. Then I'm slightly going to talk about some competency framework, where I'll try to give a detailed framework sort of thing to the audience through attachment later, but key aspects about that. Then the risk assessment methodology and frequency of the audit. How do we do as risk scoring, and what onerous is there on the board and audit committee, and then any questions? So historically we all know internal audit is what? Testing transactions, testing all controls, certain things like management things, but now having all frauds and things happening in the market and things like that, things have evolved around, and it's no more transaction testing or no more samples and no more things like, now people started to ask us comfort on the entire population sort of thing rather than sample. So what is done on the untested population and things, and various frauds, as we all know, Baiju, sort of other things are happening in the market. So the expectation of investors, expectation of audit committees, board, and also investors have increased a lot. However, as I said, and so the internal audit must actually couple with the risk management function of the company, and also it should have a proper line of connect between the risk management, internal audit and management, so that risk team and others, so that the ultimate objective is achieved. That there is no fraud or something which happens in the company, and there is no financial loss to the investors. So just wanted to go through this recent findings of the recent findings of the investigation, internal audit and investigation wing of this is a global report which came in recently on the UNICEF ERM activities. So the overall conclusion, shockingly, was even on the UNICEF activities, it was like the. Am I audible or do I need a mic? I don't think I need a mic. Generally, my voice is little. The point is, the conclusion there in the UNICEF audit by the International Internal Audit Institute was that the ERM was rated partially satisfactory and needs improvement. So, and those are significant observations in areas of ERM vision, where the executive leaders had limited vision and involvement in the strategy. All top people, governance, the limited engagement of the executive leaders was happening down the line. Risk culture improvement was required. Again, on the contribution of the executive management as well on establishment of the and also promoting the benefits. Then risk appetite was needing an improvement, as well as organizational structure, resources, capabilities. So this is a great world organization. We all know what is UNICEF. And there, the enterprise risk management framework was under audit. And this report came out in August 22 or so, and which said that there is a significant improvement and it was only partially satisfactory. So that gives an overall picture to us that globally as well, there are improvements which are really seen in this particular area of risk-based, and that's why rightly RBI being a regulatory in India and NBFCs and also other frauds which have happened over the line, S-Bank and a lot of other things which have been happening. So that's why this risk-based audit has come and assume more significance. Any questions so far? Any questions? So I would like to see this particular COSO ERM framework which has come in. So where it tries to connect everything, the environment, the objective setting, the event identification, risk assessment, risk response, control activities, it's connected to the strategic operation reporting and compliance with entity level, then subdivision level, division level, business unit level, to the subsidiary level as well. So when we try linking things this way, it gives an overall picture of how an organization and how the risks are divided in the organization. So I think it's worth it to see this and also the ERM framework in detail to go through. And after the UNICEF report had come, the International Internal Audit Institute had come up with this three-liner model where that was the structure which was there in UNICEF, where if you see the accountability is embedded in the policy, the office of the director, senior management and risk committee reporting, then you have the head functions reporting, the second line roles and the third line roles, as usual what happens with the internal audit team and the audit advisory committee on the other side. Whereas the suggested approach after the significant findings is that should be a three-line link. You should have the governing body like audit committee or people at the integrity level at the top, connecting them with the management and the internal audit getting connected, where the first line role. So the management is primarily responsible in getting the organizational objectives, managing the risk, and the governing body and the internal audit guiding them parallelly on what are the improvements required and guiding governing body going through everything in detail. Like what are the risks, what are the things which are happening, what improvements are required. Based on internal audit, again reporting directly to the governing body. Sometimes what happened was the internal audit was actually reporting to the management, and then governing body used to oversee it also in various cases. Whereas in some of the good companies with good corporate governance practices, internal audit report to the governance directly. But practically we have seen cases where this was not happening. So the suggestion is there should be a three-liner model connecting everybody. Any questions in this slide? Based on that, we are also talking about internal audit competency framework, where these 4 key attributes are required for an internal audit. On professionalism, you should have a proper competency to determine on stated authority, ethical and other governance practices. You should have a performance competence, where competency is required to plan and perform the audit in respect to the regulatory authorities' requirements and the other framework. Environment, the competencies are required for the environment in which the company in which he is doing audit operates. He should have all the industry knowledge and other things and the industry risk for him to carry out good procedures. Then he should have the relevant leadership and communication abilities to communicate this particular thing to down level and also to the other stakeholders, managing the relationships within the company and other things. So a detailed competency framework, I will try to circulate it for the time constraint and other things. These 4 attributes being subdivided into various big level things, I will circulate through the institute. Any doubts in this? So the internal audit function should assess and appropriate, make recommendation to improve the governance process and also improve decision making, risk management control. The following key attributes are, this is from the RBI framework only. So they say that you have to see the following key attributes like authority, independence, competence, rotation of staff, tenure for appointment of head, reporting line, remuneration, responsibility and other general expectations. So we will take it these things one by one. So authority, status, independence. So they should have sufficient authority, independence. The head should be a senior executive and not a very person without any experience or things. He should have the relevant competence, knowledge, experience of the particular industry he is operating. The areas of knowledge and experience may include bank, financial entities, operations, accounting, information technology. We all see need of data analytics in today's scenario, which all data analytics tools have to be used. Things like IDEA and also Power BI and other things we are seeing. Institute also conducting a lot of trainings on such activities as well, which is also a competence which people have developed now. We cannot say no longer that we are not having knowledge of analytical tools or the firm in which we operate is not using any analytical tools to do an audit. Because the stakeholders' expectations have gone up significantly where they are not trying us only to do some audit of historical things. So all these things need to be developed in the competence level. There should be a proper rotation of staff as well in the internal audit department of the company, as well as internal auditors and whoever is doing it. And the tenure and appointment of head of internal audit has to be minimum 3 years. As I rightly said before, the reporting line has to be that he has to report directly to the board, audit committee and other people rather than reporting to the MD or the executive people. So the difference is once someone reports to people like executive directors or the own management heads or sometimes even CFO, which is not actually a good practice because it's like something like you telling an error to someone where obviously you will not be able to get a right response or a right sort of the implementation which will be happening. Further, in cases where audit committee board shall meet at least once in a quarter without the presence of senior management. So this is again a requirement. You can't have MD sitting in that meeting actually or the CEO sitting in that meeting because what practically happens is they try to little demonstrate or dictate terms. In a lot of companies where I have seen practically in my experience where internal audit team is just a department. Okay, you just try to give some suggestions, you try to give some operational suggestions and a lot of cases the MD or the director starts replying to those things directly even when an audit committee presentation or something happens. So they are recommending things like please have a separate meeting with the internal audit person, the audit committee or the governance person sitting, risk head or over sitting, and then they respond to the people of internal audit comments and things rather than the executive people in the company. This is a side, very, very great level of change which they are suggesting. We also saw the 3-letter model where how it happens. Only thing is the executive people or the director can give some of the replies on maybe some measures what they have taken based on the observations of the internal audit and also what they have actually done as an improvement procedure. So that is allowed. Only thing is he cannot little restrict the scope, and I have seen in some places where the scope of the audit does not cover the risky areas at all. They will try to take some areas which is of non-risk like routine cash and bank or say in cash and bank as well they won't do something like surprise verification or something like what are the risks which are there, what happened in the last year audit. So it will be a very sort of a monotonous job or something which will happen and hence the problem. So the remuneration, yes, this is one of the points they are saying that we know remuneration of internal audit which is linked to the performance of business, which again is subjectivity. The responsibility and general expectations of other areas are such as policies and procedures are to be approved by the audit committee board, risk assessment have to be done at various levels, prioritizing material risk areas, identifying the business risk, level of risk and trend to be done, trend analysis have to be done. You should use a quantitative as well as qualitative approach. You should include multiple report analysis like data analytics, analyzing the entire sales, entire purchases, say entire cash and bank transactions, entire related party transaction, testing arms length sort of things. MIS and data integrity. How is your MIS linked with what is getting reported out as financial statements? Am I seeing a big gap, or I am just doing something for the purpose of my MIS, but what I report outside out in my financial statements or quarterly results is something very different. The preliminary assessment has to be done early in the year based on last year findings and things, and then I develop my plan and my approach so that all those preliminary assessments are taken care of. The risk-based matrix is to be developed based on magnitude and frequency of risk. I should also take inputs from the system audit. So this we see in many places. The system auditor would have given a big, and normally in 7 out of 10 cases and not even 9 out of 10 cases, the system auditor is not an internal person. He would give some separate report to the people. He will write lot of findings saying that this automation is not right, maybe this particular risk is not covered, this error is coming in the calculation or something like that, or this particular thing is not done through the system, though there is a system, people do it manually. Then internal auditor giving a separate report together, both are not getting linked at all. Always this system report, system findings will keep going on, whereas the internal auditor findings will be separately going on. So they say please work as a team. So take the system audit finding, take the internal audit finding, see whether how you can map both of this. Also see what even the statutory auditor or other regulatory findings such as inspections are there. Try to map each of them. So report is to be based on appropriate analysis and evaluation, all pending on. They are giving a very great analysis. All medium and high risk findings have to get discussed and reported to the audit committee and board. No longer to MD, executive director, whoever named risk head or whoever we call. It has to go to audit committee and board, because we know statutory audit presentations are done to audit committee board, but they are giving more onerous on internal audit presentations as well to go at that level very high, because this has to be seen very seriously. Monitor compliance and internal audit function not to be outsourced. So they are saying slightly not to let that outsourced. Any doubt in this slide or so far? And please feel free to ask. I will make it more interactive rather than.
Why internal audit should not be outsourced?
They are trying to say some of the times when it is outsourced, in many cases we see that management does not take some sort of ownership once you do that. See, there is a two-way thing to it. So this particular recommendation, what I see, is based on that point. But if it is outsourced, it has a lot of benefits as well, because an independent eye comes and check all that we'll see. But in a lot of cases, what happens is, okay, internal audit, it is their thing. Even when a stat auditor goes, but my practical experience, considering I was so much in stat audits as well, is the management tends to not take a particular responsibility, and they just say that this particular responsibility or this particular ownership I am not having. Say additional firm is taking the audit of internal audit, so they are doing the audit, so it is not my responsibility. The point which happens is, that's what I am saying, the same thing. Audit happens separately, risk management happens separately, your other procedures or controls happen separately, it's not connected. So what they tend to do is yearly once or twice this guy comes, okay, let him put his report, let us answer somehow, so let us try to close it. The point is why he is saying it, the cooperation what they give to them. So they tend to feel that once it is internal, the things can get managed better. And we also saw that 3-line connect, right? What I showed you initially. So that cannot happen very easily if it is outsourced, right? Because then what happens is a wall comes in between. Though it has a subtle difference, what happens is once it is outsourced, it has an independent eye to it, people looking at it very differently and things like that. So that advantage is there anyway. But the disadvantage happens is again people not working as a team. So internal audit working as a solo, risk management working as a solo. I have also seen practically a lot of fights happening between risk management team and internal audit team. So they say that no, we know our job. Who are you to actually come and command? The issue which happens is once he is not reporting to the audit committee or the board, his particular independence or his power is come down. If he has the authority to report to board or audit committee, he has the ultimate authority there. So he can command things, command respect, like what a statutory auditor does. Obviously, the respect what a company gives for a statutory auditor and an internal auditor, we all know. I need not actually explain that.
Yeah, we know.
It has a very, very big difference.
No, the only thing is,
Yeah.
because he's an internal person, the word which you used earlier, managed, he can be managed because his promotion, his increment, everything is going to be internal.
Right, and hence I think, yeah, right point, sir. Actually, that is what is a subtle problem once you do that, saying it's not outsourced. Again, an independent view will not come all things. But again, they are moving more towards that three-liner thing where they have to work as a team and things. One more thing, that's why they said all these things, like he should have the relevant competence, he should have the relevant skill, and he should be given the relevant power, and he should be reporting to the appropriate level of person. Once it happens, and he should also get rotated. So once in 3 years, there is a rotation of even his own staff, and even the head of internal audit should go out in 3 years now. So the point is, all these things are coming in. Then obviously they are saying that internally also that independence and other things are coming. But we have to wait and watch because this is as new as 1 year old only. So let's see how it evolves around.
Sir, excuse me.
Yeah.
Sir, internal audit being outsourced and internal audit being done by an external person, are these
Right.
two same or different?
Yeah, it's actually a very tricky question. More or less the same. When it's outsourced means obviously you are engaging an external firm or somebody.
Because it's a
But the right point is maybe yes, there is one line of thing there, like some of the staff in the internal audit department where the internal audit head might sit. That's again a different example we can see. There are cases where the lower level staff who might have to probably travel or who might have to do the basic level checking might get outsourced. But that is a very, very rare scenario, as you said. Only the staff getting outsourced, but the head is sitting within the company because then they cannot control them daily. But yeah, practical scenarios are there because nowadays even staffs are getting outsourced and the work is getting done from outsourced staff as well. As you rightly said, yeah, it happens. But in an internal audit or an audit scenario, it is very rare.
Sir, second point is we talk about this high, medium, low.
Right.
Particularly in cases where it doesn't involve a monetary thing, like it's like a policy implementation. Is there a guidance to determine what is high, what is medium, what is low?
Yeah, actually I am coming to that. An example of scoring, I will try to send it afterwards. Even the competency framework for the time zone, I am not going into a detail because it has some 3-4 slider on its own, where I will try to give that competency framework also through ICAI as an attachment separately, along with the presentation, because whatever I covered on the competency framework of individual professionalism, leadership, everything, it has a detailed score sort of thing, a detailed analysis on 5 slider overall level. So I didn't want to go only on that in detail, then the time will not be there. So I'll try to give that separately. And as you rightly said, the scoring we'll try to see how it is done. So it goes based on high magnitude, high frequency, high magnitude, medium frequency. What are the risks, how it happens, finding high magnitude, low, medium, so we know this. It gives a lot of onus on senior management. The senior management is responsible for adherence to policy, development of an effective function, where monitors, as I rightly said, your reporting goes straight to audit committee or board. So no longer board or audit committee can say, I am not responsible, leave it to MD or director or somebody, I'll just come attend the meeting, just discuss certain things and just go off. No, that cannot happen. Once you are an independent director or you are in an audit committee and things like that, the ownership is increasing day by day. After all findings and things are happening. So they are responsible for establishing a comprehensive internal audit function. It shall ensure that the risk-based internal audit function adequately staffed. So even the staffing of internal audit, even the development of plan, the policies, a consolidated position of risk faced by the organization shall be presented at least annually to the board based on input from all forms of audit. So the senior management, the onerous on board audit committees increased a lot considering all that, and I think we should see some of the improvements or the effectiveness of these things in the future. But there will be a lot of fights. That cannot be avoided because I have seen that typically happening where in some of the board audit committees I have attended now when the internal auditor tries to present, obviously a lot of directors or people some of the people may be present only for giving some answer. But if you see somebody who is very smart in talking or who is very smart in the way they can present, they might overpower the internal auditor. So it is actually still happening. But then slowly it will evolve, as I said. Because the power goes for him to write to report at the top, then obviously these people have to take their own things. Any questions? Sorry. Any questions so far on this or this? Feel free to ask. Otherwise, I'm actually proceeding towards risk assessment audit plan. So, what is risk assessment again? Just want to hear some. What is the risk? What is risk assessment? And what do we do in audit planning when we do risk assessment?
What are the high risk area and medium risk and low risk areas where it has to be translation?
Yes, sir.
What are
Can
the
give the mic to them.
Hello. What are the high risk area and medium risk and low risk area has to be identified by the audit department, and then accordingly they have to verify the effectiveness of their verification should go in.
How do you identify it? When you do risk assessment, what do you do?
Sample testing on it has to be tested. Then the planning has to be in such a way that core area which are all the risk prone area, high risk prone area has to be concentrated, and according to the effective manpower deployment, whatever, then it has to be identified.
Right.
We can.
Any other answers? Somebody else?
Risk assessment should be based on the nature of industry where that particular internal audit is being conducted. The basic nature of the industry, the risks that are likely to prevail in that particular industry, and those areas to be specifically covered in the assessment.
Right. Any other answer?
Sir, past experience, sir.
Right. So we'll just cover what are the basic concepts. Risk are those uncertainties of outcome, whether opportunity or threat arising out of actions and events. Threat, they said it's a past event which would have happened. Risk are those uncertainties that impede the achievement of objectives. So what we are trying to see is risk capacity. Capacity is how much risk that organization can absorb. Appetite, how much risk it is willing to accept. Risk response. So the purpose of assessing risk to contain them to a tolerable level is response to the risk can be so many things. Tolerate. I can particularly tolerate. The exposure may be tolerable without any further action. Okay, this risk is minimum in this industry. For example, some price risk or something in a very dynamic scenario environment such as alcohol prices or some petroleum industry. My risk might be tolerated beyond a point in the price. The price will fluctuate say 5% to 6% always. So what am I trying to do? Maybe I'll say I have a commodity hedging is there in the company where it is taken care. So that is a tolerable thing. Transfer. Some of the risk, how do I transfer to some other organization or something? Am I trying to say that, okay, I am not able to manage this, but I have some other company or some other people who I know who could have managed this better. They are in this industry, they know it better. For example, things like in our own NBFC industry, we say things like securitization and loans, bad loans getting transferred to some other company. They buy and sell even loans. So someone could manage it better, I transfer the risk. Terminate. So I decide I'll terminate it. It's no longer going to there. Then treat. So how do I treat this risk so that now it is at say needs improvement level or something, or the risk is high. How do I keep it to the optimum or medium level? Any questions in this concept of risk? Appetite, capacity, response, all this. Any questions? So the COSO categorization of risk, it says it as operational, financial reporting and compliance. So operations is something like it is not able to meet these operational objectives, process it does not operate effectively, customers are not satisfied with the services or supplier management is bad. Financial reporting is my financial control, there is a mental error on my financial statement or financial disclosures are not right. Then my compliance with laws and regulations may not be right. So COSO says it in these three terms. So one point we have to keep in mind, which I rightly said, is that three-liner approach we all saw. executive management, then you have top management and tone at the top, audit committee, others, then we saw internal audit. So I also spoke about something like risk management team, the risk auditor team and the risk head and others, internal auditor. So there will be a lot of overlap which will happen when we have this three-layer approach. What happens is internal auditor will work in his own way in finding risk, how do we assess things. Risk management team will have their own way of assessing risk, how do they operate, what do they review. So our board audit committee as well as the executive management others, so there should be a clear distinction. The point people have to understand is identifying risk, categorizing risk, and again seeing what I could absorb or whatever we saw now, all that actually is not the job of internal auditor. That is the job of management and the risk function. As an internal auditor, as a separate service, as we always do, we can assist some companies where we only do their overall risk matrices or we do their risk overall identification work and then get a sign off from them. That's fine, that's a different point. But wherever we are internal auditors, the point to note is we have to stay independent on identification of those work. Though practically it's a challenge in many cases, even in big places and companies, we see companies coming and telling us, you identify it yourself. And the point is, I identify a risk, I identify everything, and I go and do audit of the same. I don't think what I will try to achieve. The point is, we can ask them, okay, let me guide you in say improvements or whatever is required in that particular aspect, but you please share with me your own risk document, what your management has perceived. It is to both ways advantages. Suppose we are new to that company or industry, no, but in that company, our own understanding of the industry could be different. The company could operate in a very different way. They might have some hedging, as I said, commodity risk. A lot of companies might not have hedged, but the company here might have hedged their commodity risk of alcohol or whatever. So we will see that no, alcohol pricing is a risk, but in that particular company it may not be a risk. So it depends on case to case, company to company. So we have to understand the risk from the management, and that's what it says. The process of risk identification and other things, it is not the responsibility of the internal auditor, it is actually the responsibility of management and the risk audit, risk committee and others. Though internal auditor might also on his assessment planning will identify, then we cross verify. Let us keep our records separately, ask from management, ask from the risk team, everybody else, see the industry best practices, publications, institute, others. Let us compare it and say how we are coming to it. Any doubt here? Operational risk, financial risk, this one? So the stages in the plan are assessing the risk maturity, then preparing a periodic audit plan and conducting the individual. In that we say the objective of assessing risk is maturity is decide which audit strategy to apply. Then we prepare a particular plan to decide which risk management process at different level, which risk respond to audit, and carry out an individual audit, then conducting individual assurance and audit engagements and reporting to the appropriate levels. So this is a detailed flowchart of how do we do a risk-based audit. Define the objective criteria and appetite, we saw the appetite. Understanding the business is very important as such. Then you prepare an audit population, then you identify the risk areas, you filter the risk, then you categorize the risk into sub-link. Once you filter the risk, then you link the risk with the audit area. Then you prioritize the risk, which are high, which are low, which are moderate. Then you go to summarize the risk for each audit plan. Assess your controlled environment, link that. Then derive residual risk rating. Decide the frequency. Then you develop the audit. Get it approved. Assign your resources. Then reassess your risk and update the plan once you go into the field. Any doubt in this slide?
Who will do this internal audit?
Yeah?
Who will do it? Management or the office?
Internal audit plan has to be done by internal auditor. See, only thing is the inputs are obtained. For example, objective criteria and appetite, I will know from management what is their risk appetite of various departments, how are they operating, the risk management, or there is a particular risk team and others, they will be trying to also give you the particular aspect of it. Understanding business environment, we can go understand sitting with different departments in the company, updating us on what are the risks which is happening, and more what we will try to do is we have to spend more time with non-finance people as well. I think that aspect I will give in internal audit as well as statutory audit, both ways, because the involvement in some cases from people on going to non-finance, though finance may object. See, I have seen finance will obviously object, see, Why can't you go only to the sales set? Why are you wanting to go to the marketing guy? He is very busy. He will be this pricing guy is very busy. All these statements will come, but if you have to do this effectively, we have to go understand with various people, get their appointment before, send a particular agenda to them. Once you start doing them better, your things improve. See, only those people, problem is you will only get on 1 hour or half an hour with them. But that half an hour will give a totally different point. Recently, I had an understanding with one of the NBFC where we were trying to do a comparison with competition, and we were always finding that the competition was looking very better. But then it was coming to me as why this should happen. About 1.5 years over, then I had an opportunity to meet a non-finance guy, where I was meeting him before as well, but what happened is I had a chance to sit with him to discuss, say, 40 minutes, 45 minutes, where I could understand slightly the model in which they operate is very different from what this company operates. So it is very difficult to do an apple-orange comparison that way. So then our procedures and things should be slightly different to suit this company rather than with a competitor. See, understanding competition versus this is always an advantage only, but always again once you go down to understand deep into that company, you have to dust your hands in your early stages of audit again. When you are new in the industry or you are going to understand something, you have to actually dust your hands, especially at even senior management level. I am saying at partner director level as well, then you put it down. Once you get all the things right, all these meetings, obviously a partner or a director in a firm has to go. If not a senior partner, at least a partner on the engagement or a manager or a senior manager level person. Because only they will be able to ask the right questions to people. We can't leave it to first year article or an associate or whatever, however busy we may be. Especially the non-finance meetings, it's better the partner or a senior level people do. Then they will be able to understand.
So
When you do that,
excuse me.
yeah?
So when you say non-finance, maybe the examples you gave were just after
Yeah.
you said pricing, etc. What I'm asking is the core non-finance, like a HR,
Yeah.
will that also be included in this?
Yes, obviously. You have to go to HR to understand what sort of policies the company could have, what sort of risk really they are facing. I'll tell you, the payroll accounting guy will not be able to tell you really the risk what the company is facing on attrition or really what they are trying to face. Is there a new policy they are trying to implement? Is there something like the new data protection bill is come? What are the problems the company is having in the data, what company employees data they are carrying? Any system things, they might even ask you, can you suggest some of the places, how do I do Aadhaar masking? So these sort of questions will not come from you for an accounting guy. The point is we have to go sit with relevant people, understand, and hence it is an overall approach. And hence again, the point which people try to say is doing it internal is actually better. Now I am coming back to the same point, though I fully respect an external auditor gives a real different view of the things and independent subjectivity. But once you are within the company, all this getting time from them, because obviously you will also be working with 10 to 6. He might also be working at 10 to 6. So getting a time with the non-finance people, again the overall bonding will happen. But as someone rightly said, it is very easy to square off, and the internal auditor might also be actually acting as something like he might be easily compromised. So that risk is always there when it is not an independent. And hence we are saying, please do a rotation of the people. Even the head and other things within 3 years, and he could even come down later. So identify the risk areas, filter the risk we set. So once you get this understanding, put it into your audit population, prepare it, identifying the risk, then you filter the risk at medium, tolerate, acceptable, categorize it into the relevant areas, and you summarize, and then you go on. How do you risk assessment? Understanding the type of risk appetite, impact, severity assessment of inherent business risk. Then you evaluation of control risk reflected as a control score. Then you mapping of the auditable unit with the risk matrix based on the inherent risk and the control risk and determination of audit frequency. So this we are going to see at the later time. So what you try to do is you independently assess the risk of various units, and you go with the understanding of the risk and appetite and the severity. Then you assess the inherent business risk, then the control risk, then you map both and decide your audit procedure frequency. These are some of the different type of risk what someone could have. This is more with NBFC, but even it is work for others as well. Credit risk. What is the risk associated with due diligence and assessment of borrower capacity to pay, unwillingness of him, market risk, what are the risks which is there with interest rate, exchange risk, and your liquidity risk which is there. Operational risk will be so much, inadequate process, failure to adhere to internal process, execution, delivery, data entry errors. So what are the risks there? Inaccuracy, negligence, selling customer misinformation, incomplete legal issues, unauthorized access, record management, collateral, non-collateral, record management being not effective. It is prone to say some rats or something coming in or some issues in the storage of records. Failure of IT systems and other telecommunication systems affecting business continuity. We all saw what happened some days back. The 3 days where that flood has come, how did company manage? We also saw that in 2015, long back as well, when some sort of rain came like that. Since I had the opportunity of working in an MNC, I know practically the way the business continuity worked there. Even that time, 2 weeks or something, Chennai was not working only. But that particular company had managed their employees well. All the critical process, which is actually cannot be done little post-dated and things, immediately they had a business continuity plan where things were happening. They took action. All the critical aspects of it, there was no issue which they had. Whereas I know in another company where nothing was there, entirely they went into it. So it depends upon, but these things will look on paper very good in a lot of companies, but practically they are very bad in implementing. So these are also some of the risks which we might have to see, considering the environment in which we are operating now. How are they doing their BCP? When something happens, what is the alternative plan? What is the backup server they are keeping? What are the things which they are managing? How they are going into it? Fraud risk, we all know, internal, external pressures, what is happening with the company. Fraud risk is another big area. External factors such as disruptive events leading to loss, damage, physical assets, infrastructure, same issue. We saw about BCP, we also see how the assets are controlled, what insurance you are having. This Varda things came, lot of people were not even taking some asset insurance policies. I am saying about big groups, not small groups again. They realized it very badly and they burned their fingers. Whereas some of the small and old traditional groups as well had these policies in place. Very, very simple, right? We all know your WDV of assets or your book value of assets equivalent, that should be an insurance coverage policy which should be there. It's a very, very simple control, it should be there. Similarly, against the fraud of employees, that should be a fidelity guarantee policy which should be there. Everybody knows this, we all read. But the problem which happens is a lot of companies doesn't think, when will the fraud happen, why should I incur this cost? Why should I incur a cost on the entire assets? Let me take 50%. Do not believe in that Varda cyclone, they had a loss of say 6 crore, 7 crore, which could have got avoided. Then they burned their fingers. Now I think they will not be doing it, but it is actually a big risk. Then vendor management, outsourcing, etc. which could come. Legal and regulatory risk, all the legal activities on third-party contracts, clients, the way you define the contract, legal risk, financial fraud, crime, conduct of the employee, cyber security, then risk from business strategy, new products, acquisitions, major technology, technological risk, IT assets, disaster recovery, we saw cyber security. We all know the attack which is happening on ransomware, malware, lot of very secured IT systems were getting into ransomware. Though I have not seen news of historical self-developed systems, very, very conservative group issues, they were not having any ransomware problems actually. But all very sophisticated system people, sophisticated people level, they had problems such as ransomware. So data security, data classification, privacy, building enough cloud. We all know audit trial we are going to see in the afternoon, or maybe if I complete it quickly even after this if possible. Data security, there the issue comes is how do you handle the volume of data. Once you get into issues like audit trial, your volume of data and the storage space you require is very high. So now how are you going to manage the cloud? How are you going to actually manage the storage, increased storage requirement which you want? What are the risks which you are covering? How are you managing it? ESG sustainability, this is another big area which is evolving. BRSR reporting is getting mandatory in another year, another 2 years for all top 250, 500 companies. Globally, ESG standards have come. COSO framework on ESG is also come. So I would urge people to go through those things, post the training and things, because another 1 year, 2 years, normally the COSO framework is very extensive and things we all know, and to do it on a normal control itself was taking so much of time. When we are seeing something on ESG, a very new concept which is coming, it is better we acquaint ourselves so that we advise clients correctly. Fraud risk is there, including fraudulent disbursement, data of asset manipulation, inappropriate transaction, reputation risk. So what brand reputation issues which the company could have, how the name can go wrong, that's an area. Human capital risk. So someone like availability, as I covered, attrition, availability of non-skilled people, how do I lose it to competition, what is my risk? And some trainings are not done, the employees are not aware of the ethical values, he does something wrong. A small fraud from a company, such as a very big reputational group, could spoil the entire group's reputation, so that is very important. Any doubt on this legal? There are this anyway. The presentation I will leave it to the institute and they will be sharing it to you, so there is no problem. So the risk appetite, how do I decide? I see the regulatory risk, then I put a risk appetite, 0 tolerance. Regulatory, not even 1 rupee mistake I will do, or a 1 day delay I will do, or half a day delay I will do. So that is a high risk, 0 tolerance. Human capital risk, again as I said, security. Employee does anything wrong, so high risk. Information, cyber security, high risk. Operational, I might say transaction processing, I might take it as low risk appetite. Okay, 1 or 2 transactions in a volume of 1 crore or 10 crore, 10,000, 20,000 can go wrong. Quite obvious. I have 600 branches with me. I have say 3 crore transactions, a 4 crore transaction happened in a month. I might say 5 transactions can go wrong. Though that is very important, the point is among the other risks like regulatory, human capital, cyber security, that 4th operational risk will not have that rigor compared to others, because some sort of error can happen in a company. How much tolerable it is or how much rigor it is important. Transaction processing at remote geographies, I will keep it as medium risk. Your overall transaction processing is a low risk, whereas transaction processing at remote geographies I will take medium risk, because at remote places I will not have control. See, at my own location or location which is nearby, I might come to know through my sources or other things. Remote location, Andaman Nicobar, Jammu and Kashmir, or say something Port Blair or something like that, other locations, I will not have the control. So I will keep a medium risk. Internal fraud, external fraud, again 0 tolerance. Strategy risk relating to new products, medium risk one. Adoption of new tech. See, again, this is only an example. Nobody can just away put. For example, if some company is really getting into some new risky product or something, or the product itself is going to be like, I don't have a proper plan, I'm going by just guesswork and some of the other small inputs, I might put new product as high risk also. So it is only an example documentation what I have shown. It differs from company to company, wherever you operate, your own understanding of the other things which we covered so far. Any questions so far? So then, now we come to the scoring as someone rightly said. So we take all this risk, credit, market, operational, human, legal, strategic, technology, cyber, data security, ESG, fraud, reputation. Sincerely speaking, after I went through this, I know all these risks are there, but having put down that on a paper and reading through it, our approach to do our audit will be totally different after we go back, according to me, because no one would have thought about these 12 risks in a particular company and how do you give a score. See, all we know is we'll say business risk, we'll say employee risk or something, we'll say risk of pricing, we'll go differently. But once you go at this level and start doing your scoring and start developing your controls around it and understanding things, it is totally different from the other things. So of this 12 risks, to take a 7 important risks out of this 12 for your particular company, it says you please put a score of 0 to 6 based on the level there. So a score of 0 to 6 is awarded to each of the 7 risks,
and such score all is aggregated, which will be your inherent risk. That's how the model works. Then the severity impact in a scale of 1 to 5 is awarded for the risk concentration, such as the change in business, contribution to profit, what is my share of the total assets, what do I share of total employees and things. So there is a inherent risk IR given to this 12 risk. Out of this 12, you can take 7, 8 or 6 out of your own, define it. Then the severity scale is given of 1 to 5. You multiply that inherent risk by that severity scale, will give you a total inherent risk score for that particular area. Control risk is the, as someone lightly said, my previous audit rating or previous audit findings on these particular areas, what are the risks which I have seen, what are the findings, improvement areas I have seen. That I take, so they say they can adopt a score of 100 minus the adjusted audit rating as the control risk. That will be a control risk. So someone else, so you take the inherent risk score, you take the severity impact, you multiply both to find the total inherent risk, and you get your control risk. Then you do a sample prioritization of your frequency. You develop your areas, admin, cash, corporate communication, credit, deposit, operations, finance accounts, HR, legal, secretarial technology. Then you map it against these 12 risk actually. You take all your departments or your functions. This ideally we should try to ask management, or if they don't have this particular thing as well, we can sit with them or try to understand with different departments such as this. After our understanding, we can sit together with them, make them also document this particularly, and their risk department getting this done. We can help them, but according to me, let's not finalize this document for them. We have to help them doing it. We can help them little bit in defining it, and again maybe slightly fine tuning it, but not doing it on our own. Any questions so far? So how do you do the control risk? See, I told you again, we got, this is clear, right? You score 0 to 6 to all the areas where you get the IR. Then you do the severity impact SI. IR, all the IR is added for all the areas. Then you get the average IR. You do a SI. IR into SI is the inherent risk to define your control risk based on findings. So then you do the rating. If the control scores are greater than 85, after that thing, audit is effective, I can say the risk is low. I'll have 75 to 85. See, this I can decide as well. But more or less it is in this line only, generally what we do. I can keep 85 as 80, depends upon the company, other thing. 75 to 85 is a meets requirement. Then 60 to 75 is a partially effective. So those will be in medium. Less than 50 and things will go to high control risk. So improvement required, less than significant improvement required. Yeah, so the score is like, if I get as low as the score, I'll say the risk is very high. We covered this, just depicted A, greater than 85, effective, low. Same thing, meets requirement, medium, partially effective. Then again, improvement required, high. Significantly improvement required is also high. So, all the controls or the areas can get mapped against this way. I think this is one of the good things which I saw, the tool which is there. So go to different departments, different functions, map it against these 12 risks which we saw before. So only one differentiation is management might have this, only thing is they might not have it really ready-madely documented. So what we can try to do is tell them to document it by giving some templates to them. That we can do. I will tell these are my templates which are required. You please help in developing this. I will sit with you to help you also. Take the onerous of them to do. They will also feel interesting to do these things actually. But then if we do on our own and we just say please follow, they'll say we might have understood something differently by taking it from our other place. They'll say you didn't understand my company. You are not going to again dictate me terms such as this. So then the frequency of audit. So what you do is do a risk scoring. First you do, as I said, understand all this, do all this mapping, then you do your scoring. After the scoring, you do the rating, and then you do the frequency of audit. Suppose if it is, so what they are saying is, all this I will have to keep it in my risk-based internal audit plan. that the particular internal auditor has to do in line helping, sitting with risk department, sitting with his own other subordinates and the other departments, present this itself to the board, to the audit committee in the beginning of the year itself. And this might keep evaluating also. So in the first quarter I find something, or first month I find something. Some risk is moderate, I'll change to high, or otherwise high to moderate or low. So I keep, and then at the end of the year I'll say, this is what I thought, but these are the changes which happened. And I have seen practically these sort of presentations happening, where in some of the companies, previously there will be an half an hour presentation of internal auditor max, which is what we could understand. In that, say, 10 minutes or 15 minutes they can talk max. But now I see companies, after this risk-based audit has come in, a detailed presentation happens on the planning stage and a separate audit committee happens only for internal audit presentation. So that is the change. And that is taking away the things, and people start understanding these are very important. And these are not only on paper. Any doubts? So the frequency you decide, extremely high twice, very high you do annually, or once in 1.5 in certain areas. Low means I will do once in 3 years approach, something like that. So probability of occurrence, so I say expected probability rating is 3. Probability of occurring 61 to 100, the frequency is recurring, I get as 3. I rate half yearly annual frequency, probability of occurring 11 to 6, I say 2. Rare means greater than 1 year frequency. So these are some sample templates which I want to show you. In sample table risk template matrix based on inherent and controlled risk, score. So very severe, rare, very severe, likely, very severe, expected thing. So a very severe can go with rare, I am fine, but very severe cannot go with expected. So you have to put the combination, severe, rare, again, major, moderate, minor. So once you put into this table all whatever happenings or risk which we identify and what is happening in the company, a combination of very severe, expected, all this is a very dangerous thing because that will go into some issues. Some sample risk impact severity assessment, severe regulatory censure. So a regulatory action likely to result in loss of the example of an example where a severe regulatory pressure is there, unlikely to result in loss of license, resulting in penalties. So I take it moderate. Specific customer group or transaction type, system failure, connectivity, loss of collateral, litigation from client that could be expected. Reputation, limited negative publicity could come, but recovered at a cost, so I can easily manage it. So I take it as moderate. In a minor, the same scenario, it's not a severe regulatory censure. I am having a minor breach happening in one of my branches somewhere. Only one particular state, there is a 10,000 rupees or 5,000 rupees penalty I have to pay. And I have a limited group of customers affecting. The minor impact is on Mapleton. So both are very different. Here I rate 1, there I give a rating of 2. Because in a moderate, I will have some impact to the company, reputation, customer group, loss of business, something happening. Whereas in a minor case, I need not have that. I go in another example, very severe. In this case, there is a very significant, the entire business spectrum is gone. The company will have to shut down, that sort of issue. I give a rating of 5. And I have to check that maybe every month as well. A branch where there is a very high risk or very severe risk happening, I might have to test it every month. High level disruption and things, we covered this. Any questions so far?
You had shown here that issue of licensing, issue of license as wanted, it can have an impact on their continuity.
Which one, sir? This severe you were saying or here?
The next page, first page.
This one, right? Very significant. This one, sir?
We are having
the first slide or second slide?
This one only. The moderate what you have given.
Yeah, right.
There you read out it's a question of a license issue.
Yeah, but then what I have found out is there is a regulatory censure, but based on the other understanding and other independent opinions or other independent assessment of me doing it with my internal technical or getting some expert, management's again expert or opinion taken, it is not likely to create loss of license, but it has an issue. It is resulting in a fine. So I try to see what additional controls they are taking, whether this is not repeating or what is happening. So mitigation actions are very important in moderate as well. So as he rightly said, this can straight away move to high very easily. Suppose it is in one branch, it moves to 5 branches in another 3 months. Out of the 500 branches, it moves to 50. So it can go to 100 branches easily if you are keeping quiet. Even this low, if I am having it in one, it's worth it to say compliance and other things, saying that there is a minor compliance issue noted as one liner in your report, finally as well, but saying that as of now there is only 5,000 rupee impact. So once you say that, I think the mitigation actions will be taken. And these are very much problems, very severe, major. So try to put all your findings and other things into these sort of tables. Try to see how we conclude it. But then have a lot of iterations happening. First send that to the management if you are certain in your finding. Get their views to it, because our understanding might also be wrong sometimes. So always it's worth to understand from the other side. Because in a lot of cases where we didn't get some evidences, all of you would have faced, our understanding was also slightly different when we went to the different level and then they came back. Only issue was adequate documentation at that stage was not available. With this I have actually come to the end. The only thing is, this is very important. The Board of Directors, Audit Committee and the Board of UCBs are primarily responsible for overseeing the internal audit function. It has been formulated with approval of the board and disseminated. The policy shall clearly document the purpose, authority, responsibility, clear demarcation of role expectations. It should be consistent with the size of the business, complexity of operations. It should factor key attributes of the function, independence. All this be subjectivity, professional accountability. The internal audit shall be carried out effectively so to ensure it adds value. They should have a proper plan, everything developed to the company's goal. The risk assessment shall be another function shall be at the minimum conducted on an annual basis. So all my risk assessment, risk policies have to get evolving. I can't have one document and say 20 years this is the same. I have to keep changing it and I'll keep evolving annually. Every location should be subjected to this risk assessment. The policy should lay down minimum, maximum period beyond which the low risk activities would not remain excluded. Yeah, that is also relevant. I will say 3 years I am not going to do some audit of some area. I will have to have a clear demarcation saying that when I will audit them as well. Because 3 years something is not audited, suddenly that could become an high risk. If someone is not monitoring someone, they might, some companies that could be a problem. The policy should also lay down the maximum the period beyond which the risk areas should be resolved. The ACB is expected to review the performance of risk-based internal auditor. They should formulate and maintain a quality assurance. So now there is an assessment of internal auditor, competence, everything is required, and they have to document it formally as per the new policy, and they have to again present it and keep it in the board minutes. The assessment of internal auditor also has to happen. These are all little new concepts which are coming, but worth it, because then the performance and the other things of the internal auditor will be increasing. The quality assurance program may include assessment of the audit function once in a year for adherence to the policy objectives. We also covered new tools used, analytics used, we spoke about that. They are expecting those things also to be put by the audit committee and things, and told to the internal audit team, other people in that function, saying please start using analytics, please equip yourself to analytics, equip yourself, and they should tell the executive people to say that please incur some cost on this, though they will say that this is not required, because the world is now going towards all these analytical tools, analytics, automation, whatever we call. My concluding thought, it's not an isolated exercise, it is an integral part of the governance. The audit process and issues, there are far-reaching consequences. We all saw what UNICEF faced. Such a great organization needs improvement in ERM. So that is why globally also various issues are happening, things are getting evolved. And India is also going into the global and evolving and taking global practices. So risk-based internal audit plan ensures focus is most critical to the organization. Success is determined largely by the attitude, approach with which they carry out the planning. Planning is very important, apply judgment, and it also provides a clear cut to the team in achieving the objectives in a cost. Happy to take any questions, otherwise I am done.
relates to contingencies. And contingencies, if anything, which is not predicted, something like that.
Yeah, that is what we also saw na, something like BCP plans of the company, which you rightly said. There should be a particular plan put in properly, not only on paper saying there is a BCP. What they will do, which place, for example, if Chennai, are they having a secured center in Bangalore or something? Are they going to shift something to Bangalore or some other place to manage this? How do they manage the contingency? There should be a proper plan put in. So after all these flood, other issues and things going on, all these things will be additional significance areas which is coming. A company which is having that always, for example, in some of the international companies, one company has an opportunity to work, things like fire drill or things like all these things, as you rightly said, they are given utmost importance in that company. Someone going on the stairs, you have to use the handrail. I am not joking, because I faced it 2.5 years when I was there. 2 warnings are given to people who don't hold the handrail. The third time if they do it, they are against the policy, they are checked out, even if you are the MD. So if you keep that sort of compliance, now it's actually very high only there, very strict, but if you keep that sort of compliance, there will be no issue with the company, and they manage their BCP excellently. Right from starting of safely reaching employees, and the company had 5,000, 6,000 employees, 5,000 employees and 4,000 employees at that time, I think 2015. From the international hotline, calls went to all 4,000 people to check whether they are safe. And they wanted to hear the voice of the particular employee or his own relative, if the employee is sick or whatever, saying that it is safe, and it was recorded, and their BCP plan was excellent, they could able to manage. Yeah, it's a cost. I am not saying it is easy. The point is, since they do it, they didn't lose any key business, any key customer or anybody. Because your guy, a lot of people are supporting abroad customers, abroad everybody. You just say them that I am actually not able to do your work. So they will say, what is your backup? The second question which comes is, I understand. One day he will keep quiet. The second day he will start asking you, where is your backup? And at the back of his mind, he will be thinking, okay, this guy does not have a backup. You say the excuse in the second day, he will decide, let me not be with them. Because this flood is going to come every year now. It's not a one-off thing now. I'm sorry for using that word, but that is how the environment is going on. That's how your disruption of natural calamities is going on, whatever happens. So that is why all these other things are very important. Things as you rightly said. Anything else? Yes, sir?
Any model or standard software is that
Standard software.
even
Software.
Standard software, some tools are available, but only thing is, even those tools, you have to do a lot of tailoring to it to keep it. For example, I would have given a model template, even some assessment, but you might have to try to tailor it to your requirement when it comes. Even your impact assessment or internal audit competency assessment, I share a template to you. Now, whatever I share here, a lot of times what happens is people go blindly take it. They say, okay, reputation this, then it is only moderate. The problem is, don't please try to, I kept it very practical, because in my slide, if you see, except very few things, I have not have copied the RBI framework. Because if I have done that in this 1 hour, I would see everybody will be sleeping. Because my point is, I try to keep it very practical, giving an example, going into your international thing, why it came in, things, because that will make it interesting. Otherwise, it is not going to help. If you go and read this 50-page or 100-page document, people will really become drowsy. Because it is not very, very interesting, according to me. Only thing is, please do tailoring, start going and doing those meetings. Please see how your things improve. I'm not only saying on internal audit, even a statutory audit. If you are going to do even a limited review, I'd say some of the approaches with good firms are best thing to do is, they try to have a 10-minute catch-up with the MD, a friendly catch-up with him. See, if he is very close and things like that, you might need not share an agenda. But then in a lot of formal companies, international companies, I should send an agenda to them, block their calendar. Just do that. Half an hour you block it. You might not even get half an hour, 15 minutes in that, worth it. He would give you a risk area for that particular quarter audit. I have seen various places, what happens is your finance team will not tell about some new order, new things, your financials will come very late to you. I am going slightly away from internal audit and telling this, but it's important. What happened is once you start aligning, even this risk-based circular came, one of the other circular came on audit trail. We aligned one of the best practices, we did it even it was effective from April 1, 23 only. We went back and aligned with them right from September, October, November that this is going to come, this is very important since it got postponed. We realized in a big company, the audit trail was not enabled for cost reasons on all critical areas. Though you will be having in your mind that company will be okay. The problem was in a very big company, very big group, it was not enabled. After we continuously went and told them in every audit committee, in the board we started saying this is important. They enable correctly everything from 1.4. So now there is no problem for them. Some small findings could come everywhere, that's a different point. But at the overall level it got stuck. And in one more case we were saying, I think when we come audit trial I'll tell them, but then there were examples. Aligning them at the right time, getting into an understanding, go on meeting actually a lot of non-finance people will become very sort of interested to meet auditors, to share some of the findings. Where the finance guy might not allow him to talk even to the other people. And sometimes the finding goes to the top. The resolution also happens to people that way. A lot of things are there. Even backup not taken on daily basis. A lot of international companies have to take the backup now. And they have to keep it in Indian server. That requirement has also come. So no more, we are going with global practices and that's what we saw. Whatever is covered in RBI framework, will not believe. I can also share the UNICEF report which I got and to people that and the other thing. More or less 60-70% of both are same. The problem is we are now trying to adopt global practices, global best things and it is very quick. August 22 is what that report had come. Our framework was actually in 2021 itself. That way we are ahead of them actually what they had suggested. But things will be with like it is happening across everywhere. It's not only India which is telling us to do a lot of things differently.
Which type of organization is based on mandatory?
Yes, sir? Yeah, it is actually mandatory for NBFCs, banks. And listed companies, to my knowledge, it will get mandatory. No, not mandatory now, but it is better because lot of big fours audit. I was with big fours and big firms audit goes with risk-based approach, and that gives a lot of value addition to client, and hence clients start going only to big people side. So there is a comment which would come saying that why people are only taking to big fours, why people are not coming to other auditors and things. And again the view of the Indian government, I attended other seminars with the finance minister being there in Society of Auditors and also the other institute regulations, other institute head conferences where we were told that our PM other objective is to bring Indian firms in par with global firm standards, and hence all these things are happening. And it is actually helpful because once you know these things, you go and meet someone in a flight or somewhere, you try talking, he is an international guy, something you attend, you start telling something about I know also something happening like this, the way he sees you will be very different. First, it's the duty of us to equip ourselves. If we cannot do 100%, I will tell you this same UNICEF finding, this same RBIA, even the big four would not have been able to implement it 100%. It's very vast. But the point is at least try to go towards it. They would have done 60-70%. Can I do 30-40% first? Second year, can I do to 60%? Then I think I will come out easily. The way I start approaching is even when Ind AS came, same problem came. The way I start approaching, okay, these are all big things. Let's not concentrate. See, a listed company can actually need not appoint you as internal auditor. They might try asking you because of the cost orientation, sir, can you do my risk strategy or something? Can you do my risk-based matrix? For all that, first of all, we should also know fully things. And I think it's worth after this training to go and start reading the risk-based internal audit framework of what RBI has enabled so. I think then you can come back with any questions. I'm leaving my email ID and phone number as well to this because we have a limited time and I'm happy to take any questions. Sir.
You can share this document.
Yeah, it will be shared from ICAI. Yeah, sir. You can give the mic to him.
We use this term analysis and analytics.
Right.
Also mentioned that. Mostly interchangeably, but definitely there's a difference. What's your take?
Yeah, right. So analytics means something which you do, analysis is what you obviously do when you try to analyze every month sales or every month purchase, or I do some analysis on my entire population. Analytics is I do it with a particular purpose maybe. What I try to do is analytics is something I do say on an overall level. I am going to find out what is a negative number of say sales which is there in the entire population, or I'll say that a customer which is above my credit period in that entire population. So giving an overall comfort on the entire population, I do something called analytics. Analysis I do always. Analysis is again to understand and things. If someone can give a better answer as well, fine. But I just based on experience, what I could understand is analytics. You go based on, you say something like preliminary as a risk assessment analytics, finance analytics, so all that risk that helps you to define your audit approach and focus on specific areas. That is an analytics. Analysis is done as part of your regular audit procedure. So that's the difference. So preliminary risk assessment analytics, what you tend to do is, I identify particular area where I have to concentrate more. I know in this company, say, sales should have gone up by 15%. Say my market, everyone in the insurance industry, new premium has gone up by 20%, say. I would expect at least 15% they should have gone up. By IC, they are down by 7%. Then there is something wrong. Or they went up by 40%. Then also there is something wrong. So that's an analytics, overall level. Risk assessment, I found out, okay, this company has, as compared to the peer and industry, it is actually slightly in a very different way it is gone. So what is happening? So in revenue, I will focus more. Whereas in cost, I see it's more or less the same. So an analytics is slightly different from an analysis section. A very focused work is called an analytics, which also helps you in find out the risk and then define your audit procedure, stat or internal, whatever audit. Good question, sir. Anything else?
If the tenure of the internal auditor is 3 years maximum, and the new internal auditor is again appointed, then won't he take a bit of time to learn both the company and such? So doesn't the advantage?
Ideally, what happens is there will be someone who is already experienced, who might be in the risk team or who might know. So they will not decide a head of internal audit that easily in a company. Just think about it. So that enough work will be going towards it, or someone would be prepared right and down the line to become the head in that, and some other department guy who is extremely good about the company overall, knowing the risk guy become the internal audit guy become the risk guy. All that happens. So practically that happens. But good question, yes. Yeah, there will be a problem in takeover. That will happen. Yeah, mic there.
What and how AI is going to affect this internal audit?
Good question, which I rightly said about the automated tools and things which are there. There are tools, there are auto routines which are possible, where, as I said, multiple population level other things is negative reports or negative numbers or something like an exception which is happening. Tools such as IDEA, only thing is AI is going to change the way monotonous works are going to happen. It will take away those jobs, is fine. But what we have to do is we have to equip ourselves with how to use those AI. For example, things such as ChatGPT. I'll give a slight smaller example there as well. In my own practical experience, I started using ChatGPT not on all confidential or any matters, but on doing some of my firm's newsletter, which has actually helped me a lot. The way I could write the same newsletter, saving of time what I could get as well. Though I do the concept on the original subject and other things, whether anything is changing by ChatGPT, I check. Is the meaning really changed or whatever? But the way it is explained, it is in no time completing things easily. I can take a circular in no minute, I can complete preparing a newsletter as well, or some summary of it. But again, I can't do it on a client agreement or some other important agreement which I am doing on my routine work, because there ChatGPT where those data are going and getting stored. But a circular or RBI circular, things like RBI, what I'll summarize or something. I can give another practical example of some slides which I have done. They are using something called Designer, which is there in Microsoft 365, which is again a AI. I have a text. Once I put that text in there and I put Designer, select it, it throws multiple options on the slide how it should look on its own. It will save a lot of time for people. Maybe in the afternoon session when I take audit trial, I can show some of the slides which I do using the AI. So I started learning it a bit, though I will say I am not an expert. In all my stat audit, big clients and insurance, other places, we started using things called IDEA. So what we realized, what we can put comfort to the audit committee, other people, is very, very different from what we used to do before. We said we have analyzed or have done analytics over 3 crore line items, and we say that there are no negative items which are there, or there are no multiple items, and those all 3 crore line items, they are all within this particular range. NBFC example, I have seen commission paid to 5 crore cases, and in all the cases I noted the range of commission rate was between 0 to 3%. When you say this to the audit committee, or say otherwise, I have done 150 samples or 200 samples, and based on my understanding from people, the commission rate is not more than 2 to 5%. Tell me both these statements where they will get more comfort. I have always been doing this, right? I will say that I had an inquiry, I have done understanding from that rate, I went through my list of transactions, I did sampling, then I came to know an Excel you cannot do that. More than say 5 crore or 10 lakhs items, if I not say, even it crosses 3 lakh, 4 lakh items, Excel will start hanging. That's the normal practice what we have. And all this AI or analytics will help you a lot. Duplicate findings also. It says something like potential duplicates. That is, I have AA, then I'll say AA1, AA plus. In address, I can do these tricks as well, right? Same address I have to keep. I'll put AA1, AA plus, whatever Excel it will say it is not duplicate. Analytics tool go ahead and say potential duplicates, it will give you the reason. So these are some of small examples what I say, though it has multiple things in it actually. So worth it, we start, lot of AIs are there in the market. Things like Power BI, those dashboards which are coming in are actually very excellent than others. People are expecting you nowadays. If you are wanting to get a multinational audit or a big group in India, a big company like TCS, Infosys, Engagement or something like that, Wipro or something like that, they want how you are equipped yourself. What are the things you are knowing? How trained are you? How are you really there? And I think Institute has also started taking a lot of sessions on ChatGPT. They are taking sessions on AI. I heard, I think 10 days, 12 days back there was something happening. Recorded sessions might be available. Lot of things is available on internet. Like lot of unwanted things which are available on internet. Lot of these things are available on internet for people to start with. I would urge you people start going through it. Otherwise we will become redundant. Once you are not having, and even in engineering, robotic engineering, automation engineering is at peak impact now compared to your other engineering, and people are paid 5 times more salary than others. Those other all old stuff. So only thing is people who equip themselves to technology, the amendments, other things which are happening, they go ahead quickly in the life. Actually that is very, very important, because once you are not updated, you are outdated and you become rest. That's all. So AI actually is going to give more opportunities is how I could see. Because I could see that happening when we tried telling it to people and we started developing it, and also other big four. I know Ernst & Young or somebody has their own AI big team, and they have actually developed a big AI tool on their own, where in one of the other joint engagement where we were working on, client had a lot of appreciation for that. Though we then started going towards AI at the big stage, We could also little not match them, but at least go little near them because of the other tools we have started developing and using or started knowing ourselves. Because that's how the market is, that's how the world is. Without AI, we cannot function beyond a point. Yeah, I think the session tightly closed. So, any other questions? I'll be sharing the presentation on the framework, what I told you. And I'll be sharing my email ID and phone number as well. Anything you can complain. Thanks for the opportunity.
Thank you.